Collins & Co.'s not-for-profit conference, Be Empowered Through Knowledge, is designed specifically for the not-for-profit sector. Our speakers are experts in this sector, and their practical approach provides not-for-profit board members and management with the opportunity to improve their skills and knowledge across a range of specialist topics. The conference also provides a great networking opportunity. Partner Fabio Camerano introduces our next speaker.
And that's Rake Eksteen. And Rake is the audit principal at Collins & Co. Rake specialises in the areas of audit and business services and has extensive experience advising and auditing not-for-profit organisations, including dealing with compliance and corporate governance. So without further ado, please welcome Rake Eksteen. Thank you.
Thank you, Fabio. Welcome all. I'm glad to see there's a couple of people here, not everybody gone home. I see on my slide, on my notes here, my topic is how to commit fraud and get away with it, but it's probably not the right topic. So let's go to the one I actually prepared for. A show of hands in the room, who have been impacted by fraud in their organisations? Not too many, which is surprising, to be honest, because non-for-profits are pretty rife with fraud normally. Okay, so I can ask if there's any of these cases that was basically prosecuted. Hands up. No, that tends not to happen. And a lot of the time we find that these cases are not reported to police, and when it is presented to police, you really need to basically present them the whole case with all the evidence, otherwise they're not going to really make a big effort. And because of the limited resources, it makes it hard for them to really engage you. Basically, there was a video, did a survey in 2014, and they came up with some interesting findings. I'm not going to read through all of these. I've got quite a lot of slides. I'm just going to basically work through it and comment on some of them. I probably won't discuss all of them in full. So there was I think 3.2 million reported fraud. Sounds a bit low. And the average fraud of 200 to 904 sounds low as well. Sorry. Okay, talk about a typical fraudster being over 50 and was a paid employee. You'll find most of the time it was a trusted employee, that people have been with the organisation a long time. And collusion was found in 30%, as well as management involvement in 31%. And the biggest fraud is cash theft, which is quite surprising, but there's still people around that deals with cash. And probably two of my more recent fraud involvement in clients were situations where cash got stolen by a trusted employee. There's three types of fraud: financial statement misrepresentation, you got misappropriation of assets, and you also got bribery and corruption. In order for there to be fraud, there needs to be a pressure or incentive. There needs to be opportunity to commit fraud, as well as there need to be like a rationalisation or attitude by the person to actually commit that fraud. So when we talk about fraudulent financial reporting, is a lot of the time we'd find it in for-profit entities where management are presenting or need to picture a certain picture to their shareholders or to external parties, and then sometimes they really are a bit loose with the truth and put numbers in or leave numbers out. A lot of time this is to do with management bonuses, and I think in not-for-profits you will find it where you need to present a certain picture to a funding organisation, funding government body, and it can happen. Or maybe you had such a bad year you play around with your revenue in advance. So it's not impossible in not-for-profits. Misappropriation of assets is where employees help themselves, the cash or assets, And sometimes management are involved, and in management it's easier to hide things, and it's a lot more difficult to find fraud when there's collusion. Then you've got bribery and corruption, where you get kickbacks from your suppliers, or you get overcharged by suppliers, and the employee get a bit of something on the side. It's also the AWB case where they paid facilitation fees to foreign governments. It's also called bribes. So if you look at the conditions for fraud to occur, the first one is there need to be a pressure by management to produce a certain result, or there's an incentive by an individual that basically are living beyond their means, they cash strapped because they're gambling and they need a cash, just plain greed. Oops, sorry. There's an opportunity. So the person that commits the fraud knows there's an internal control that doesn't work properly, or there may not be an internal control that's going to cover that specific situation. So it's normally a position of trust. So he basically, a lot of his time, set up the banking payment, he authorised the banking payment, and then it doesn't get picked up because there's no internal control. And people, they need to be rationalisation or attitude. So people steal it because they are not paid enough, they're underpaid, they feel they are not fairly compensated. And sometimes good people do bad things. And it's about giving people the opportunity to commit fraud. If you give them an opportunity, there's a good chance they're going to take advantage of that. So the most common type of fraud in not-for-profit organisations is the misappropriation of assets. So it can consist of cash theft, the use of assets that's not cash. It's where you have fraudulent expense claims, and sometimes, I don't think in large portions, we have revenue fraud. So what happened where there's a disbursement of cash and there's a problem with the billing and the way to do it with billing and invoices. So I'm going to give you a bit of an insight in how you do it. So you're a purchasing officer and you set up a company that's a fake company, and you basically raise invoices in this fake company to your non-for-profit. You're the person that authorised because you obviously got the goods, and that gets paid. Or you have a related party that do deliver services to your not-for-profit, and you basically inflate the price, get a bit of a cut on that. This where when a vendor does work at your private home or one of your rental properties, and they're paid by the not-for-profit organisation. It could be a situation where you actually misuse or use the staff of your not-for-profit organisation to do work at your private home or rental properties and don't pay for it. So that's the kind of thing that can happen. Also, we submit invoices for goods that you never received. Basically, or you submit duplicate invoices that was already paid, or you slip in an extra payment. And that's basically why it's important to capture the invoice number when you capture invoices in your creditor system, that you can look for duplicate invoice numbers. Expense claims that are fraudulent. You can basically get people that claim their personal expenses for business, personal travel. I had a case where an employee got fired because they used a cab charge for their after-hours personal travel. And that basically got picked up, got fired, and they put better controls in place to look at that. Also by using the company credit card for their personal expenses. Where you basically get fraud by getting through the payment system, either using diverting an EFT payment to your own account, or when you draw a check, after the check's been signed, you change the details on the check, and the checks get basically banked into a different bank account. It can also happen that you put you go into the back end of the system, you change the creditor's payment details to your own, you make the payment, and then after that has happened, you change it back. Also, if you have access to the password, but I think that's probably, it can happen, but yeah. I think check fraud is becoming less frequent, but I mean, if there's still checks around, it can still happen. So the payroll, so you basically get some defraud organisation by way of the payroll or for compensation. So you have a ghost employee on the payroll system. Somebody's left and it's kept on the payroll system for a week or two after they left, and that money goes into your bank account. You have a situation where you've got a leave and lose system that's being tracked informally, so that gets abused, especially if you're the person that keeps track of it and authorises everything. That happened to one of my clients. Same with overtime payment for hours not worked, and basically if your employee is basically sitting at work and doing their own business, then that's fraud as well. And of course, the biggest one is theft of cash. The biggest problem is where the cash gets stolen before it actually gets into the books, or if it's in the organisation, then it has been received and been recorded. The person writes a credit note and ensure that they can take out that cash or can hide the disappearance of the cash without raising too much questions. And I had this instance at a childcare where the parent come in and pay for the child's daycare and childcare, and like you know it, this person actually had a book in which they recorded all the fee payments, so whether it's cash, whether it's EFT, check, credit card, so they made a nice recording of all that. They put it through the credit system that captures the childcare debtors, and then some of the cash disappeared between that and getting banked. Never got picked up. And the reason for that is nobody actually reconciled what happens in that separate standalone system and see how that information gets translated into the financial system. And that went on for at least 4 years, $200,000 later, and I'm sure it was probably more than that, because this person that was 10 years or at an organisation. And it always starts small, and once they see they don't get caught, it gets more and more and more, and they get more bold. So this is the type of thing that happened. Okay, the theft of non-cash assets, so it's theft of laptops, iPads, or really the unauthorised use of that, theft of inventory. You can even sell the IP or sell the IP of the organisation without them knowing and get paid for that. Revenue fraud, like I say, it may be a question where you have to bring forward some grants in advance because your situation aren't looking at great this year, and you took a bit of a liberal view on how you're going to interpret that year's grant. So you can also have discounts. You can understate your revenue. Same issue where you steal the cash, then you have to make sure that it doesn't get picked up. Now, the biggest thing is, if you know fraud's happening, and it can happen to you, and it probably will happen to you, is to make sure that we can prevent it. It's always a question, who watches the watchman? I find it's always a good saying. The best way of picking up fraud is basically having good internal controls, because there's two things that really encourage fraud. One is that you have internal controls, but it gets overridden by management or someone in a position that can actually are authorised to do that, or you have a lack of internal controls. I'm going to basically talk about what there's different things. There's certain early warning signals. I'm going to talk about that. Then there's also fraud prevention type of strategies, and as well as fraud detection strategies. Okay, early signals. The person spending a lot of money, it looks coming into a lot of wealth. I heard a story about in England, there was a lady that every Tuesday at 4 o'clock in the afternoon, she got on a chair, danced like a chicken and threw money around. And you're thinking, that didn't raise any alarm bells. So there's a lot of funny things, or the person got 2 Corvettes at home, or they got a lot of properties, always talk about their properties. A person like the lady that just did a big fraud at Clive Peterson, bought probably over 100 properties and cars and a lot of things. So I think she probably were quite, didn't hide it that much or didn't hide it that well, but nobody really tweaked on that. People with gambling habits or addiction habits. And then there's always a question, people maybe passing journal entries where they're not really supposed to, or people having access to information or parts of the system that they're not supposed to have access to. Staff not taking holidays. Because what happens when staff take holidays? You discover the fraud, because nobody there to hide the fraud, or nobody there to make sure that stuff that are inconsistent are smoothed out. So when staff go on holidays, there's a good chance you're going to pick up fraud. I'm not saying all the staff, but if you're going to pick up a fraud, that's a good chance when it will happen. If you're bypassing approved systems to buy stuff and services, so you're not getting free quotes as per your policy. If you are basically paying more than basically your allowed spending limit. Lack of supporting documentation. It gets a bit fishy if you ask the client, okay, so do you do creditor reconciliations? Yes, we do it. Okay, so where is it? No. We do it and then we chuck away the paperwork. You find really interesting things going on. So the lack of supporting documentation for transactions, lack of reconciled bank accounts and cash accounts. In this day and age, people still don't do it, and they're actually surprised that they have to do it, and the system doesn't do it for them. A lack of reconciliation of debtor and creditor. One of my clients I picked up last year, I think the creditors were out by about $40,000 the last 4 years. Never got picked up or I don't know if it got picked up and ordered the previous 3 years, but definitely wasn't commented on. So that was gone back to 2011. And I think the staff member were quite surprised that, is that supposed to agree to that? So I wouldn't say I was pleasantly surprised, but yeah. The lack of reconciliation of clearing accounts and suspense accounts. It's always good to know what's in there. You need to reconcile your super to ensure you pay all your staff super. You need to make sure that clearing accounts get cleared. Because I mean, you don't want an unexplained variance especially in a control account. If you have items on your bank reconciliation that says cash deposits, and it goes back a few months, that's always not a good sign. And inconsistent financial data. So where you have a standalone system, there's certain information that comes from that system. And you can say, okay, my sales per that system is so much, my receipts per that system is so much, my credit notes is so much. How does that translate into your financial accounting system where you capture all the rest of your information? So is that process being followed? Okay, I've received $100,000 in the standalone system because for some reason it's separate, standalone, special. How does that translate to the receipt that went into the bank account? And how does that information make sense? So sometimes you will be surprised that it doesn't make sense, or you can find a problem because there's misallocation between accounts. But that's most of the time it probably will misallocation, but it could indicate a bigger problem. Some prevention methods. Okay, pre-employment screening like police checks and reference checks. Surprised how many people still don't do reference checks. Not always a foolproof method, but I know of an instance where a person was employed by a client of ours probably about 25 years ago, ended up at another, probably a company that became a client later on, committed fraud at the first one, committed fraud at the second one, finally went to jail at the second one. So I don't think people change their nature. So it's always good to find out what's going on and is there any previous history of fraud. Making sure you review internal controls, that can be done by the external auditor. A lot of time that's probably a bit of a special engagement because the audit will look at internal controls. They probably won't look at all internal controls. So if you find something that's glaringly wrong, they will tell you, but if that's not a main purpose of the audit. Developing a corporate code of ethics and conduct. I think a big message is the tone need to come from the top. There need to be zero tolerance of fraud, and if something happens, you need to basically set an example and say, this happened, this person basically gets terminated because that's our policy. You mustn't send out mixed messages or send out the message, no, it's okay for some people to commit fraud, or some things are okay and some not. Enforce leave. If you force somebody to take leave, then it also forces you to put somebody else in that person's role, which is a good thing because that means you train your staff to do a bit of crossover between other jobs. It will be a bit of a good cover of that person going on leave. It's good for their professional development. And we'll also pick up something if something's wrong. If somebody else looks at it and say, oh, this doesn't make sense, why doesn't it make sense? Because the person that commits the fraud will be there, will smooth things out, will fiddle a few numbers, put journals through the control accounts. Once you know what you're doing, you can hide it. I mean, I think a lot of the time fraud gets discovered because somebody stumbles across it. It's not always that obvious. If people collude and if people know what they're doing, it's very difficult to find. So it's good to have some, okay, there's whistleblowing policies. So you can have a whistleblowing policy in your company where saying, okay, if you suspect something, you can phone the HR person, or you can even get external people to act as your whistleblowing line. So you can get like maybe an accounting firm like KPMG, for example, may offer that service. So that's like a 1-800 number, but it gets, the calls goes to them and they report it to you. So then it's not internal. So I enforce the idea that staff need to take leave in the year it's accrued. It's also a good OH&S policy. Like I said, a rotation of employee duties. It's always good to have a manual as well to capture exactly what is this other person doing, so that when the person that are performing in their role know exactly what they're doing or supposed to be doing. And then there's the old one of segregation of duties. The person that receives the money shouldn't be banking the money, and probably shouldn't be the person that records the money into the accounting system. Who are using your credit cards? Are they authorised to use your credit cards? And same with who's allowed to basically make your purchases. Is the purchase authorised by the person? Do you have a purchase order in place? Is there authorisation of two authorisations for your payments? And a good thing to do is the matching of your payroll file with your creditor file, because that will tell you, are there similar bank accounts and similar addresses between your payroll system and your accounts payable system. That could be a question like, I'm reimbursing my staff member for an expense incurred. It could also be, it's ABC Pty Limited, but it's the same bank account as my staff member.
Rick, I'm just wondering, is there any particular software you'd recommend for looking at that particular 0.5?
there's data mining software available, but even something like Access, which is the database software of Microsoft Office, can be pretty. You can in there you can basically do queries which says, okay, show me the duplicates, bank account numbers, or you can do various queries based on your different columns. That's basically what I do, and I normally use Excel and sort things and just look for the same bank account being paid for different payees. Looking at exception reports, is your payroll but out of whack with your budget? Is somebody getting paid more than you budgeted for or which you are expecting? Same with changes to master files. This is where you will pick up if I go in and I change the bank account details to my own and then after the payment change it back. At a real estate client where fraud happened because the guy was doing that. Actually happened before my time. But basically it's a question where, so I would assume he basically then, when the tenant complained, he would then pay out of his own bank account, so he would have rolled the money around. But that's the way we would basically just get a cash out. Use of purchase orders, make sure you only authorise a payment of something that's actually been ordered via your purchase order system, unless it's something really you would normally expect to have. A requirement for a regional invoice to be presented. It gets more tricky nowadays where you have a lot of stuff being sent by email. So this is probably where you have to be more vigilant and ensure that you know what you're paying. I think the last point of a list of authorised suppliers, probably a lot of for-profits probably, and maybe in non-for-profit space, depends on really how much purchasing and procurement you actually do. Reconciliation processes. I've got compliance that's really good and compliance that's really bad. So you need to reconcile key account balances on a regular basis, preferably monthly. Some you can do quarterly. But that really will pick up, is there any variances? Why is there still outstanding items on your reconciliation? Having strong controls over your assets. So you need to have a fixed asset register. And for small things like iPads or things that really nowadays are under $1,000, you'd say, okay, I really expense this. You need to keep track of those things. So have like a bit of a library system. So that asset is booked out to somebody. So if it's a school, then teacher A's got allocated iPad A, and that's his responsibility until he brings it back. Same, doing stock take of assets, it's always good to, depending on the organisation, maybe have like a training organisation, and it's good to have like a list of assets that's in that room, so you can do a check pretty easily what should be there. You need to review journal entries. When was this journal entry made? Was it done on a weekend, after hours? Who made this journal entry? The key to all of this is good internal controls, and a good internal control needs to basically going to be one of 7 things. It's either going to ensure that information is complete, that everything is there, all the transactions are recorded in the books. It's accurate, so it's been done at a correct amount. Authorization, so desk control ensure that this payment has been authorized. There's no unauthorized payments that slip through, and it's been approved. Everything is, there's supporting documentation behind the payment. Validity, it's a check to see that, okay, I paid for a service, I paid for a product, did I get a product, did I get a service? And that's where you get maybe the sign off by the, it's still not foolproof if you have somebody that's in collusion with somebody. But if there's no collusion, then let's say it's authorised by your manager of that division, then at least you know there's validity that they received that service or that product. The existence, making sure that you paid for asset that it actually exists, or you received the service. Internal control can ensure that if there was an error made, that you can pick up that error, and you can pick it up timely, and you can correct it. And it also ensures a segregation of duties, that the person that does receive the money does not do the banking, or receive the money does not do the recording of that information into the data system. Because what happened to this client of mine, this person had a childcare. The person was at the front desk, they received the money, they wrote it up in a little book. They, in theory, took that money to the bank it. They're responsible to capture that receipt in the parent's data ledger, and but they weren't at least responsible for recording it in the books. My problem, what was recorded in the books was just the receipts, so they didn't have a proper system. And the theory there is, if I paid for my childcare, I'm going to know I paid for it. So the person that took that money going to fix that system and make sure that's right. But because nobody's checking that system against my books, nobody's going to pick it up. I think the message to take away from all of this is you need to have adequate internal controls, and making sure that the tone from the top is with zero tolerance of fraud. And I always say that the price of good accounting records is eternal vigilance, so you need to be on top of things. Is there any questions? Except for where the bar is? Yes, Alex.
How do we compare in Australia for fraud compared to other countries in the world? Are we more trustworthy of our employees?
I think, based on my experience from coming from another country originally, I would say so, yes. I think Australians are pretty trusting of people, and I wouldn't think corruption would be as rife in Australia as it would be in other places of the world. But you get fraud anywhere. And if you create an opportunity for somebody to steal money, they will steal money at some stage. There's a good chance they will. If you create an opportunity and a temptation.
We have to toughen up and be more diligent.
Yes. It's always vigilance is always the answer. Is there any other questions?
Rebecca, you just touched on it briefly, but intellectual property,
yes,
in terms of misappropriation, or if it's an asset of yours, for example, management or prevention of misuse or stealing of intellectual property in your organisation. Any thoughts on that? Difficult,
because you don't know what your employee are up to. Because you can basically, before this person leaves, they can basically download everything you got. You may not pick up they did that, and when they leave, you left on good terms, but they took everything with them. I think that's one of the biggest risks in something where you have something like a unique product or something, just a good system that works really well, and you think, wow, it's a great system, but I can take that somewhere else to the next employer and say, wow, this is the way how we do it at HIOA. Well, and it's pretty so difficult to track unless you've got really don't give people access to that stuff. But I mean, it can be anything. So I'm not saying it's easy to do, but it's something you probably need to be aware of, or can happen. Or it really depends on the industry as well. Maybe not in non-for-profit, but it's possible. Any other question? Derek.
It's just a comment, Rake, based on experiences with my clients. I'd certainly agree that being unable to show a reconciliation of accounts and primary records can be an indicator of potential fraud, but it can also be an indicator of just people being slack.
Incompetence.
Incompetent. Slack, more focused on helping kids in need or something. I've had a client that had a funding agreement with a government agency. The government agency wasn't happy with the acquittals, and through a bit of toing and froing, an external auditor came in and audited the charity's accounts, and they came through with a clean bill of health, basically, although their financial systems weren't robust enough. But the point I'm making here is early on the government agency representatives were using the F word fairly with great liberty, which didn't really help my client, which put the fear of God into them and got quite a defensive repartee going. So certainly fraud might be, the lack of reconciliation, etc., might be an indicator of fraud, but my suggestion is be very careful with the F word until you can show that it is intentional.
Yeah, I wouldn't say go and accuse people of fraud, but I think you need to do your homework and make sure that's. I'm not saying it's like a sole indication, but it could be an indication of things not being well, because sometimes a small difference on a reconciliation can hide a massive problem. You just don't know how deep it goes sometimes. Do we have any else? Yes.
Yeah, Rick, you said that I think something like 54% of fraud in not-for-profits is not reported. But my understanding is that in any white-collar industry, fraud is seldom actually reported. So how does it differ from other white-collar industries?
I do not have the stats on that, but from what I can see and what I read, it's very true. It's people just tend to shoo people out of the door, and it really becomes the next organisation's problem.
And that's because
unless it's a lot of money being stolen.
Bad publicity will be more damaging than the fraud.
That's
itself,
correct.
Don't they? Yeah.
And I think it's a question there. It's too hard. The police doesn't want to prosecute. As a non-for-profit, you can claim from VMIA or your insurance if you have insurance. So I've had the two instances, both claimed from the insurance. The one we try to go to the police, I don't think they press charges yet, and that's 4 years down the line. And I don't know what happened to the other one because it wasn't my client at the time. So, yeah, it's the toll it takes on your staff. Let's say you're the person responsible for going digging out what went wrong. The toll on the staff is enormous. And it's in the stress and that type of thing. So because you don't want to accuse people of something they didn't do. So just that stress on them is enormous. Anything else? Well, thank you very much. Thank you.
Thanks very much, Rake.